Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at SchnellInvestor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. So I want to talk about a couple of things today. The market is definitely trying to rally as I record this Tuesday afternoon. We're working off the lows, and we made the lows exactly 1 month ago on the options expiration day. Friday was an options expiration day, and we've been rallying from there. So that looks pretty good. I want to share with you some other ideas I've got about the market here, and I want to specifically talk about analyzing some of the industries looking for turns higher. So the market finally is exceeding the 50-day moving average on both the NASDAQ and the S&P 500, and obviously that's one thing that we've been trying to get with some sort of positive positioning above that on daily charts, and on weekly charts the equivalent would be a 10-week moving average. So 5 days a week times 10 is roughly 50 days. Because of vacations, that gets a little messy, but the bottom line is we want to get above that 10-week moving average or the 50-day moving average and get moving higher. Commodities are trying to bounce here with the dollar rolling over, and we're going to talk about that a lot today because I want to talk specifically about trading commodities differently than trading tech stocks and that type of thing. I'm going to go into the bond yields are reversing to start today, and then we're going to specifically go into gold, and it's terribly damaged. And the whole thing about commodities that I really want to reinforce is when commodities pull back, that is the time to look at them, not when they've got a big halo around them and everybody's trying to buy a breakout to new highs. The problem with commodities is they oscillate between highs and lows, whereas a tech stock will make higher highs and higher lows typically, and then it starts to make lower highs and lower lows for a lot longer. One of the things about commodities, they can move relatively quick. Like an ETF like the GDX can move 30% in 1 or 2 months, really making a quick move to the upside. So we need to have methods to kind of look for that. And today, that's what I specifically want to talk about. If you'd like more information on the services we offer at ospreystrategic.org, you can pause it here and just check. We've got a $7 1-month trial, or it's only $860 a year, and that gets you, roughly $17 a week. But there's two of us here at Osprey Strategic. We offer award-winning technical analysis, a weekly newsletter and video, monthly conference calls, and we send out some interesting trade setups that look really good each and every day. Okay, let's jump into these charts that I want to talk about. So first of all, this is the bond market. And one of the things I can't get my head around is the bond market knows that the Fed's probably going to raise interest rates next week, but the yield chart has pulled back basically from the time the Fed did their last interest rate to now. So they priced it in ahead of it, and then it pulled back. Well, this actually marked the low in the stock market. And so here we are rallying up. And my concern is we're trying to rally up, yet we know the Fed's about to do another interest rate hike, pushing, let me just bury this to get a little more screen real estate, to push this to a new high. And the idea of the interest rate rising, as you can see, going back to 2022, when the stock market or when the bond market broke out, that's really when the stock market started to top. So if we're about to start our next leg higher in the bond market, is it good to expect that the stock market would continue higher? And my premise is that's a little bit tough. So enjoy the ride while you've got it. Just make sure if you're trading stuff to the long side, you've got stops underneath. And if it rolls over, you're out. Captured a little summer money. But if not, then it's probably a good time to make sure you're cautious about this trade here. And if the market continues to run, great. I just want to make the point that if it doesn't continue to run, it would be a really important place for us to be aware of. Now, we can also draw a trend line under this advance, and if the market starts to break down even lower, that would be helpful. or the bond market starts to relax a little bit. It's just hard to imagine that, oops, not FCX, sorry, FVX is what I wanted. And what you can see on this one, same thing, this is the 5-year yield, and it's trying to hold up, and again, it started to break out in October. But really the big push was in December when it started to rally, and that's when the S&P 500 stalled and started to move lower. So we have to be cautious here. Just if this market's going to start pushing higher, that would be a big deal. So all of a sudden, just when things start to look good in the equity market, bang, comes the reversal switch. And I think that might be because of the Fed next week. So think about that just if you're trading these markets. Okay. So to start with, I mentioned that commodities have been terrible and gold has been really terrible, right? It's been way up here to way down here. This is the GDX, the Gold Miners Index. And since the end of April, it literally rolled down from, let's say, $41 or $40 to 26. That's not quite a 50% haircut, but it's pretty close. And so it has moved incredibly quick to the downside. But we have one thing called this percentage of stocks above the 200-day moving average. And this indicator, you can do it for different sector groups like XLE or whatever, but this is for the Gold Miners Index. And the point I would like to make is this chart is quite ugly. And I saw it on Twitter today, so I've just recreated it for the viewers here. But the point being, when this bottoms out at zero, it's not a place to run away from commodities, it's a place to get interested. And I think that's a really important component to be aware of. Now, how often do you get a zero bottom signal? So that makes it feel like it'll never rally, and that could be true. But the odds are that we're going to get some sort of big rally off that. And if we do, again, we've been down here for almost a whole month. When we get that rally, it was a pretty sustainable one off the 2018 low. And it came and it started to rally. And then in 2019, it pulled back for a couple of months, then it started again. So this was a meaningful low back in 2018. We had the dip in there that shows up on this indicator as well. But then we also have the dip in 2020, which was the COVID low, and pulled back down, and that was a slingshot higher. And whether you were in commodities or you were in something else, this thing literally from March to August took off and made 100% gain, and then a big pullback, got down to 10%. So you can see the idea that this oscillates pretty well. And here we are with these zero indicator. So to me, it's a place to look at commodities, not a place to avoid commodities. And when this thing is tagging up at 100%, I want to be a lot more cautious being in a commodity. Now, it doesn't mean I want out, but it sure means I want to tighten my stop. So if it doesn't hold up, I don't get hit. That's my concern when you trade commodities. If people think about them the same as they think about whatever, a tech stock or a biotech as it's making new highs, you want to get more interested. And I'm thinking, okay, maybe down here when it breaks out of a base like this that it's been building for multiple years, but you sure don't want to be picking it up in here because it made a higher high after a huge run off the lows. So again, we want to think a little differently about the commodities market, and that's what I want to focus on today. So how do we do that? So I have a chart list made up for gold, and this gold stocks to trade list is just one I created. Now I went through today and I went through, there's over 200 charts in here. Lots of them are penny stocks. So I looked at them, and if they didn't have enough trading volume, I didn't really approach them. But we have a group of chart columns that we can put on this indicator. So we're in summary mode for any chart list. And again, here's just, you can have a chart list of forestry stocks or gambling or something. I created all of these. But this is a summary. view, and you can get anything you want. So in here with the columns button, you can select the columns you want. Now I don't really need the links, which was that box on the left. I don't need the university or the universe that it's trading in for the scooter ranking, so I can take that out. I'm going to keep the scooter ranking because we're going to trade on that. We know that these are in materials, either precious metals or gold mining, so we don't need the sector and the industry. And close is obviously important. Dollar change can be helpful. Percentage change is the one I like the most, and I like the plus minus window. To look at that volume is helpful. I don't really want to trade something with 800 shares trading, right? That's a little thin. And then the market cap, what's the total value of the company? We don't really need that today, but at least it's in there. We could use it. But now we have these three EMA or these levels, SMA 50, EMA 20, and SMA 200. And when we turn those on, what it tells us is the stock above or below the 200-day moving average. And so if we sort on that, this shows us the one that's the farthest above. Now this is a penny stock. So we could sort on that, and now we can go over to price. I think this should work. And when we do that, what it's going to do is put the highest price first, but it's also going to give us this rotation. Now we can quickly scan down and look. Here's something 22% above its 200-day moving average, but it's below both the short-term moving averages. We'd like to see something that's all green, and guess what? In gold, there are none. The closest thing we've got is something like this, like Alamos Gold, with 2 out of 3 above the moving averages, so the 20, the 50, and not above the 200. And we can go click on that stock and we could take a look at it. That's one way of sorting it. The other way of sorting it, and actually let's just go click on that one just to make the point. So what we have here is, I've got a whole bunch of things on here like Keltner bands, and maybe I'll just, rather than delete it, just turn it off for viewing, and we can put the other price targets on here. So we're going to have the 50 period, and we're going to have a simple moving average 200, and we'll make that one solid, and we'll make it green, and we'll make the short-term moving average red and the mid-term moving average blue. How's that? Okay, so the idea being that we have the 3 moving averages here, and you can see the green is horizontal here. It's not doing much, but the idea behind having these moving averages, and if we just make the price opacity 1, and I'm going to just change this to a 1 year. What you can see here is the stocks in a downtrend when all of them are aligned this way, and then when they start to get turned positive, you'd like to be aware of that. So when the 20 crosses above the 8 crosses above the 20, and then the 20 crosses above the 50, these can all be helpful signals. And we haven't even looked at the price yet. Now, when we add the price back onto the chart, what we'll see is that these uptrends are pretty well defined by these moving averages crossing up, and we can have a PPO buy signal that can help. The other thing that I like to look for when I look at a stock is I like to look for these downtrends in momentum that start to change, and this one a little bit more difficult to draw. There was one here. There was also one here that we could go with, and when it broke out, that wasn't a bad place to get on board. So there's some clues there for us, and one of the things I like here is the momentum is trying to improve much like it did on this last run, and let's just say that this did start to rally and take off to the upside. Cool, we'd be ready for it. So we've used a couple of different tools. So we have the scooter ranking, which I don't have turned on just yet. I'll put that on the top of the chart, and we'll move that up. And I always like to put an overlay of a horizontal line at either 75 or 25% and 75%. And the idea being that will give us, Oh, that didn't move to the top. Let's just fix that. So scooter line position above. There we go. Okay, so what we've got is this scooter shows the stock is behaving better than a lot of the stocks in its group, and but it's been in a downtrend. It's near its 200-day moving average, and if it was to turn back up, that would be pretty helpful. And we can see that the momentum trend is close to changing, and the other thing we can see, the price trend is close to changing. So that makes for an interesting stock, and I'll just save that. So we keep that view. But the whole chart list is actually set up with this sort of viewpoint today. And the only reason I did that was just to go through and just analyze how big the downtrend was. And you can see this A-mark precious metals, lower highs and lower lows still going on. The one thing that I would say is the momentum trend is trying to change to the upside after a 3-month downtrend. So, well, it's horrible right now. Perhaps this can start to change. And obviously one of the things that would help that is if the US dollar would reverse. That would be one. But the other thing we can do is when we want to look at these, we could either just quickly scan, and you see the same thing over and over on these charts. They're all in a downtrend. And momentum indicators are trying to reverse to the upside. So it makes for an interesting place to look at these charts. Oceana Gold, Yamana. And again, I'm not trying to sell you on the idea of buying gold stocks today. I'm just talking about how to analyze something using different tools on stock charts, and whether you want to do it in biotechs or you want to do it in software stocks or whatever. The idea here is to just try and help you understand some of the tools that are available, and then first of all, more importantly, what to look for, or what tools are you hoping to have that would help make your decision. So once we put these stocks in here, this is that Alamos Gold chart that I changed up. Again, this one just goes back to March. So roughly on this Alamos chart, it's here for everybody else. So this looks quite compressed. The big point I want to make is that as you look through every one of these charts, they're all in the same trend. There's no real magic here. Now, we can do the same thing with the software stocks or whatever, but you're getting the idea that all of these have downtrends, and they may or may not be breaking. If they all start to break at a group, that would be nice to know. So how could we know that? Well, we could go back to the actual list themselves and change that. So we could go into here to summary, and we could watch for these number of stocks with a positive 20 EMA to start changing. And let's just say whatever, there's 50 there. They're starting to move above the 200-day moving average or 20-day moving average, and a whole bunch are still below. We can do the same thing on the 50, and we could analyze that. The purpose is to look at different ways to see the whole group starting to turn, because they're all in the same downtrend. So when that downtrend breaks, there's a pretty good chance that it's a nice time to get on board. Okay, I'm not a big fan of buying really penny stocks. So I typically like to sort by price and then the scooter ranking. And then what that does for me is it puts the strongest stocks first. And so I've sorted the stocks like that when they're sorted on their numbers to see that that sort order. So I get to look at the strongest stock first. So remember how I mentioned that a lot of them are in downtrends? Well, this one, it's still in a downtrend, and it has been for about a month. But you can see just last month it tested its prior high, and the momentum indicator looks like it's about to start breaking out here, and the stock is trying to turn. So maybe it can, but it's also starting to get below one of these moving averages, the 100 period. Maybe it continues to stay stuck there. We don't really know. But again, I want to look for the whole group to start to flip. When I view them, again, using this sort order, so putting the strongest stocks first, I can go through and get an idea. But I think if I'm looking at the strongest stocks first and they're all bailing out like this, it's still not ready to buy. But as they start to move above their 20-day moving average, that might be an example of something to start looking at. Or you start to see the bullish percent index change for the group, etc. There's some other things that we could do. Lastly, that I want to show you is on here. I got to get all the way to the top here. Sorry for the scrolling. I want to change it to look in either gallery view or CandleGlance. One of the things about CandleGlance, you're going to see that most of these charts have downtrends. Maybe that's too small to see. Most of the charts have downtrends on them. And what we want to look, this is over a 1-year period or 8-month period. We want to start to see if any are starting to turn up. So here's Alamos Gold. Again, that was the one we identified, and it's starting to try. But, just looking across them, here's one here. Seabridge Gold trying to break this downtrend. PPO is turning up. There was some volume that came into the stock right on the low. So perhaps there's a clue there that this is starting to change. Now, again, I'm not trying to sell you on a stock. I'm trying to explain some of the different ways that we can look at these to help find trend change. And typically for me, as I had shown on all of those charts, I drew a trend line on the PPO momentum indicator, and I want to see if that trend line is starting to improve, because the momentum has to improve, which is the PPO. The price percentage oscillator is what that means. And it will typically make a higher low. Even without looking at the chart, it should make a higher low while price makes a lower low. And that's one sign that the momentum isn't as weak as it was. Whereas if we look at SSRM, it's still making a lower low in momentum. Now maybe it comes up and makes a higher low and then takes off to the upside. That's the kind of thing we'd like to see. But essentially, we should see all these gold charts change at the same time. Okay, let's go and look at GDX. That's the gold miner ETF. That looks like a downtrend to me. Perfectly straight line down. There's nothing really going on here. And again, it's just because commodities, I want to buy them near the lows. But in general, this is my momentum trend. And if that was starting to change, I'd be more impressed or more interested in getting long the stock. So that's one way to do it. And then I'm going to show you one other method that I like to look at. And it's in a chart list that I create every week. And what this specifically looks at is the bullish percent index. Sorry, shrink this down. Okay, the bullish percent index for the gold miners is in a downtrend. This is a 20-day moving average. And when all four of these try to cross above their moving average, that gives me an idea that perhaps we're ready to put on the gold trade. Now, it doesn't sound like much, but this little move here was $30 to 42. Over a 30% gain, most of it in the first month. It was quite a move up. And again, the chart I had of the gold miners suggesting that they're right at the bottom of their base would give us a clue. You can see that was the move in February that had that big surge. Well, if we go back to this gold miners chart, this move in February had that surge. So I think there's some opportunity here. Now, we just have to wait and be patient. But as this chart starts to lift and these indicators go through these price action on these different charts go through the 20-day moving average, that can be a helpful clue. So the gold miner ratio compared to gold, the actual price of the gold miners ETF, the actual price of the gold ETF getting back above its 20-day moving average, and the bullish percent interest moving through. Okay. Again, the idea, I'm not trying to sell you on the gold stocks. I'm just trying to say it's in terrible shape. And that's great because that gives us a chance to at least be aware that when they turn up, we want to get on board. And that simple clue could do more for our investing success than sitting there waiting for something to break out to new 52-week highs as a gold stock, and we're wondering why we're having trouble making money on the trade. Hopefully that helps. So again, if you got other questions about the type of work we do at Osprey Strategic, there's a low-cost $7 1-month trial that you could try. But if you're interested in this sort of analysis and trying to get you into the right sectors as they start to move up, hopefully we can give you a hand with that and try and get you in on trades that are starting to work a little sooner rather than waiting for the trade to have run the majority of the distance. Thanks for taking the time to join me. Have a good week. Market Buzz airs Wednesday at 10:30 a.m. Eastern. You can also see the recording on StockCharts TV YouTube page. Thanks. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.